Hey everyone, welcome back to another video. In the last video, we went over 3 variations. Today, we're going to cover the next 3. So let's dive into the next one. Here, we're spotting a trend followed by a chart pattern and then a breakout in the opposite direction. But instead of jumping in right at the breakout, we're waiting for a pullback first. This is a reversal strategy. We're using Coinbase stock as an example. You can see the price was moving up before a descending triangle pattern formed. It could have been any reversal pattern from our list, but in this case, it was a descending triangle. When the price broke below the pattern, it signaled a possible reversal from an uptrend to a downtrend. That's when you could look for short trades. However, cautious traders might wait for confirmation through a pullback. In this case, we got that confirmation with a long wick candle forming at the new resistance, where the bottom of the triangle and the trend line meet. That's your area of confluence. Once you spot a shift in trend on the lower time frame, you could enter short positions using our strategy and tools. Now let's go to the second variation, a pattern forming right at a key level. You first identify this key level through a previous reversal. As price drops back down, you see a descending channel forming at this level. Again, it could have been any pattern, but here it's a descending channel. When price breaks out above the pattern, it confirms the reversal, and that's your cue to enter long trades. Let's move to the final variation. This one starts with identifying a key level, then spotting a candlestick pattern, followed by a chart pattern forming at that level. We're looking at Microsoft stock again. We've seen an earlier pullback entry, but this is a second chance using a new variation. Here are the strong signs in your favor. You're trading with the main uptrend, there's momentum from the pattern breakout, and the long trades that followed. Plus, you've got an area of confluence where the trend line, newly formed support, moving average, and Fibonacci level all crossed. As price pulls back into this zone, several long wick candles appear, reacting to that area of confluence. When you see those candles, it's time to dig deeper and examine the price action within that zone. You're looking for signs that the short-term downtrend is about to reverse into an uptrend. Even though the broader trend is up, this pullback is technically a short-term downtrend, which means price could still break through and extend the move downward if the reversal fails. It's important to remember, the pattern inside that zone doesn't have to be a wedge, triangle, or channel. Any reversal pattern from this video can work here. Now let's compare the weekly and daily charts. On the left is the weekly Microsoft chart, and on the right is the daily. The key level and area of confluence we identified on the weekly chart is the same one seen on the daily. In this case, we got a clear descending triangle at the area of confluence. When price broke out above it and formed a higher high, that confirmed a trend reversal from downtrend to uptrend. One key detail here, notice how the price didn't shoot up instantly after the breakout. It pulled back slightly before taking off. That's why 2 things are crucial. Use lower intraday time frames to find the actual entry using our strategy and tools. Understand where to place your stop loss. There's one specific stop placement for breakout trades and a different one for pullback entries. If you like this video, make sure to give us a thumbs up. And don't forget to subscribe and press the bell icon. That's it for today. See you next time.